If you have a floating rate mortgage in Japan, and most people do, then it's quite likely that your interest rates have already gone up or they're going to go up soon. But what does that mean for your monthly payment, and should you be worried? So interest rates in Japan have been very low for a very long time. And partly because of that, most people have floating rate mortgages. And that means that when interest rates change, the interest rate that you pay on your mortgage also changes. Now, recently in Japan, interest rates have been going up, and last week the Bank of Japan put interest rates up to 0.5%. Which is higher than they've been for quite a while. Not in the slightest bit coincidentally, last week I got a letter from my bank saying that as of January, the interest rate I would be paying on my mortgage has gone up from the initial 0.5%, which is what it was when I took out the mortgage, to 0.65%. So it's gone up by 0.15%. Now, I asked about this on the forum, and there's a lot of people in the same situation. Either their interest rates went up last year, the end of last year, or in January. And with this recent interest rate hike, it's quite likely that everyone else is going to see their interest rates going up soon as well. Now, my mortgage is quite small. I took it out 5 or 6 years ago, and it was a 30-year loan at 0.5% floating rate. The amount of the mortgage was 9.9 million yen, so my monthly payments were very low indeed. I'm paying just under 30,000 yen a month, of which 25,000 goes towards the principal to repay the loan, and just under 5,000 goes to the interest. Now, my monthly payments haven't gone up yet, but if the interest rate was reflected in the monthly payments, I think they'd go up by something like 1,000 yen a month, maybe 1,500 yen a month. Not a huge deal. The reason they haven't gone up yet is likely the 5/125 rule, which is something that banks in Japan have, and it limits their ability to put up your monthly payments. The 5 in the 5/125 rule refers to the fact that your bank can only put up your monthly payment once every 5 years. And the 125 means that your new monthly payment can't be more than 125% of what it used to be. And taken together, these two really limit the amount that your monthly payment can go up because of rising interest rates. Now, there is a downside to this, because just because your monthly payment can't go up doesn't mean that you're protected from rising interest rates, because the interest rates apply to the loan anyway. And what happens is that your monthly payment is adjusted so that more of it goes towards the interest and less of it goes towards repaying the loan. In the worst case scenario, this means that your loan will be extended and you might end up having to pay it for longer than you initially planned. On the whole, though, I think it's an excellent mechanism to make sure that ordinary people aren't catastrophically affected by rising interest rates. Now, we've seen that happen in other countries that don't have these protections, especially in the UK, where mortgage rates went up hugely and people suddenly found themselves with much higher bills without much warning. So, should you be worried? I'm not sure there's cause for worry just yet. So we've seen a very small increase. So for me, it was 0.15%, resulting in a possible increase of maybe 1,500 yen a month. Obviously, most people have larger mortgages and their payments will be proportionally larger as well. But again, this isn't going to be catastrophic for most people. I do recommend keeping an eye out for any letters from your bank that might be explaining how your payments may be changing or how the interest rate may be changing, and maybe figure out potentially how much your monthly payment might go up. So what can you do? Facing this situation of rising interest rates and potential further rises, what can we do looking ahead to the future to prepare? Well, I would say the best thing you could do is something that we recommend doing anyway, which is living below your means so that you're not maxed out across the board every month. Hopefully you're already saving some money every month, you're investing some money every month, and if you really needed to, you could reduce those savings, reduce those investments if you needed to move the money across to pay your mortgage instead. And that's the best way to be safe with your personal finances, just to make sure there's a bit of slack in the system. You're not spending everything you earn, but instead, you're putting away 10% or 20% or, maybe even more every month. And in an emergency, you could use that money for the emergency instead. Now, you could remortgage, but I'm not sure that makes sense, because even with these increases, even the floating rate mortgages are nowhere near the level that they were fixed at the time. So when I took out my mortgage, 0.5% was a reasonable rate for floating rate, and fixed rate mortgages were over 1%. And, we're nowhere near 1% floating rate mortgages even now. So I wouldn't rush in to remortgage or try and get a fixed rate now. I would be aware that, interest rates are going up, see how that might potentially affect you. Try to reduce your spending a little bit to give you a bit more slack to potentially deal with it. And basically just get on with your life. This isn't a huge deal yet, but just be aware that it is happening. So how about you? Do you have a mortgage here in Japan? Is it fixed rate? Is it floating rate? Did you get a letter from your bank telling you that the rate's going to go up? Let us know in the comments. Thank you for watching, and we'll see you in the next video.